Welcome to Delphos Insights. Go almost anywhere in the financial world today and you'll hear that question being whispered. Is ESG dead? The critics, well, they're certainly getting louder. They point to recent setbacks, question its credibility. But looking at our sources today, the story in emerging markets seems quite different. It's not decline, it's evolution, right?
That's exactly right. And that's our core insight for this deep dive. While, the West might be debating compliance frameworks, emerging markets seem to be pioneering what we could call ESG 2.0. Our mission today is really to analyze that shift. It's a move towards something much more data-driven, accountable, focused on measurable outcomes, real investment-grade standards.
Investment-grade standards.
Yeah. And for you, the listener, the key takeaway is this isn't just about compliance anymore. It's embedding sustainability deep into business operations, tapping into that, $8 trillion growth potential in these markets.
Okay, let's trace that evolution, though. The old corporate social responsibility, CSR. It often felt a bit like window dressing, didn't it? More about philanthropy, maybe some volunteer days.
It really did.
Was there ever a clear path from that to these rigorous standards, or did we need this sort of radical reboot?
I think the reboot was essential. CSR, well, it just lacked the financial rigor, the metrics that investors actually need. ESG 2.0 is fundamentally different because it recognizes sustainable practices aren't some separate nice-to-have. They're intrinsically linked to managing real financial risk.
Okay.
And to enhancing competitiveness, securing long-term performance. And what's fascinating, despite all the noise, is the resilience. ESG fund assets globally have more than doubled in just 6 years. We're talking US $3.6 trillion.
Wow, 3.6 trillion.
Yeah, that's nearly 7% of global AUM. And that's with some significant outflows we saw, for instance, in the US earlier this year.
That resilience is pretty astonishing, especially with those headwinds. So does that explain why emerging markets specifically seem to be driving this change? Are they just better positioned?
Well, if you think about the bigger picture, EMs are really the next frontier for this. They hold vast natural resources, crucial for the green transition. Their supply chains are expanding rapidly, becoming central to global trade. And crucially, they're often on the front lines of climate change risk.
Much more exposed.
Exactly. So they have to adapt and adapt quickly. It's not just ethical, it's becoming an economic imperative for survival and growth. And that US $8 trillion potential, it's tied directly to getting this right.
Right, okay. So moving on to how this actually works in practice. If ESG 2.0 is all about accountability, how do companies ensure it's authentic? How do they avoid that greenwashing label that really damaged the first wave?
Authenticity, it really boils down to measurable goals.
Wow.
Setting targets and being transparent about progress or lack thereof. It means moving completely past the superficial stuff, the marketing slogans. There's a great quote from Bart Turtleboom on this.
Oh, yeah.
He said, ESG is not just about compliance anymore. It is a strategic tool for creating long-term value. When we focus on real impact, everyone wins, investors and society alike. And that's the core of 2.0.
That makes sense. Focusing on real impact. That must attract specific types of capital, right?
Yeah.
What are the key financial tools driving this growth, especially in EMs?
Yeah, the main engine is definitely innovative finance. Green bonds are huge. They make up, roughly 60%.
60?
Yeah, about $3 trillion of the total $5.1 trillion in global green, social, and sustainability-linked bonds issued since 2018. And we're also seeing a really interesting rise in sustainable sukuk. That's expected to cross $50 billion by 2025. It aligns Sharia principles with these ethical, environmental goals.
Interesting alignment.
Very, but here's the challenge, the real question it raises. Despite all this innovation, emerging markets, they only capture about 16% of the overall, say, $1 trillion ESG bond market.
Wait, hold on. Only 16%. That leaves a gap of what? $840 billion?
Exactly, an $840 billion gap.
Yeah, that's huge. It suggests the opportunity is recognized, but maybe the mechanisms or the confidence aren't fully there yet to bridge that gap.
Precisely. The potential is massive, but translating it into large-scale investment flows is the hurdle.
Okay, so let's see it on the ground. What are some concrete examples where this is working? Where profit and purpose are genuinely aligning in EMs?
You've seen some clear examples of value creation. For instance, Delphos advised Wave Mobile Money, that's in Cote d'Ivoire and Senegal. That led to a $90 million loan. And the direct impact, over 1,500 jobs created just by expanding mobile financial access.
That's tangible impact.
Definitely. And on the infrastructure side, think about the San Patricio solar plant in Guatemala, a 66 megawatt project. We helped arrange US $34 million in non-recourse financing. No government guarantees needed. It directly strengthens their energy grid and drives local economic activity. profit and purpose.
So wrapping this up then, what does this really mean for you, our listener? It seems the future of ESG isn't really a debate about its survival anymore. It's clearly evolving, and emerging markets are, well, they're leading that charge, presenting a pretty clear path for sustainable growth globally.
Absolutely. It's an evolution, not an ending. And perhaps the critical question, the thing for investors and policymakers to really mull over now, is this. How do we aggressively tackle the bottlenecks, the structural, the regulatory issues that are creating that staggering $840 billion ESG bond market gap in emerging markets? Because, closing that gap feels like the real key to unlocking global sustainable development and building genuine resilience.
This has been Delphos Insights. Learn more at delphos.co.